Hey, welcome back to the good, the bad, and the Bitcoin. 2024 is almost over, so it's time to get the crystal ball onto my table once again and give you an outlook for 2025. I want to talk about what I think is going to happen on the stock markets, where my price target for cryptocurrencies such as Bitcoin is in 2025. And while I think that 2025 is still going to be a very positive year, there are also, in economic terms, some real danger lurking on the horizon that I need to address so you are prepared when really the worst should happen. Hey, welcome back. And yeah, I want to start here this little outlook for 2025 by talking first about the stock markets, especially the S&P 500, so the largest US stock index. I think it's fair to say that this is like the index that, everybody on the financial markets is looking at. So whatever happens there, you can for sure say is also going to happen on other stock markets. And I would like to talk here about something that I call the US presidential election pattern. What is this? So first of all, you see here a candlestick chart of the S&P 500, and then you see here in green, orange, and blue how the stock markets, how the S&P 500 performed under the last three presidents. So that was Barack Obama, of course, that was the first term of Donald Trump, and last but not least, Joe Biden. And while under all presidents we had rising stock markets, you can see here also a very interesting pattern. And the pattern here is, first of all, that 1 year after the election, so last election was in the beginning of November, so 1 year from that point in time, we usually have very well performing stock markets. You can see that was the case under Obama, that was the case under Trump in his first term, and that was also the case here under Joe Biden. Then we kind of reach a peak on the stock markets and things either go a little bit sideways or even there is a correction coming, which was, of course, here under Joe Biden, for example, the case, which also was the case when Donald Trump was in his first term. So back then, that was obviously COVID. So it's kind of probably safe to say, or a good bet, at least in my opinion, that history will repeat itself and that we will see quite well performing stock markets until, for example, November of 2025. And this is sometimes the funny thing when you look at things like this, that you find the same pattern over and over again, which also, by the way, is here true for Bitcoin. Because usually what you see from Bitcoin here is when we go back in time, that Bitcoin takes about here 370 days after the halving 2016, 500 days, 550 days here after 2020. So somewhere between 380 days and 550 days from the point of the halving until the peak price for Bitcoin for that period is reached. And if we forecast this into the future and say, like, okay, probably the top price of this Bitcoin cycle, of this 4-year Bitcoin cycle, is going to be reached somewhere between 380 and 550 days after the halving. Well, then we are also here in this area somewhere between late April 2025 and end of October 2025. And especially this end of October, beginning of November, this is also what we find here on the presidential election pattern. So this is very much in sync, in my opinion, what is happening there. In terms of price, I expect that if this pattern repeats itself, that will top out somewhere here on the red channel. So if we forecast that one a little bit in the future, somewhere here around 200 to 300,000 US dollars per Bitcoin. Now, this, of course, is very, very positive. And you could think like, I should just throw my money into stocks, into Bitcoin, into cryptocurrencies, and everything will go well. Well, while that should be true for the most part of 2025, it's not necessarily true for everything, because there are some real dangers lurking, in my opinion, on the horizon. And one of those dangers where we should look into more fundamental analysis, specifically here, for example, the US yield spread. So this is the indicator you see down here. This is simply expresses in percentage the difference between a government bond, US government bond in this case, with a maturity of 10 years, and the yield of a government bond with a maturity of 2 years. And normally, when an economy is performing very well or when growing normal, you would always see that, you get a higher yield for the 10-year maturity, which of course makes sense. Compared with you giving your money to your bank, I think you would expect your bank also to give you a higher interest rate if you give them your money for 10 years than when you give them your money for 2 years, right? Well, that's not always the case, because there are cases also where this yield spread inverts, meaning that that there is even no difference anymore in terms of yield between the 2-year and 10-year maturity, or even you have an inverted yield curve where you get a higher yield for the shorter term US government bond. And not funny enough, if you look at this pattern, whenever that was the case, you can be sure that in 100% of the times there was a recession following. A recession meaning a time period where the US economy was shrinking and not growing anymore. And this was always the case about like 12 to 18 months after this period of an inverted yield curve. So we can see here 1990, 1991, that was the Gulf War. We had this inverted yield curve, and then a recession hit the market. So this is the S&P 500, of course, here, the green line again. This was the case here in 2001, in the 2001 recession, the so-called dot-com bubble. We also had an inverted yield curve before that. That was the case before the great financial crisis of 2008, where we had 2 years of recession on the financial market. This was the case also prior to COVID, where we had a mini recession, just 2 months. And interestingly enough, we are right now in an environment where this yield curve has been inverted and highly negative, as a matter of fact, for more than 2 years. I cannot remember anything like this from at least my lifetime, where we had an inverted yield curve for such long. So if history repeats itself, and then we probably might see in the upcoming 12 to 18 months a recession, a major recession starting in the USA. And you can be sure if the USA goes into a recession, you probably will see the same in most parts of the world. I don't know where this recession will come from or what will eventually trigger it, but it is highly, highly likely that this happens because, as I said, this pattern or this causality between an inverted yield curve and a following recession has a hit rate of 100%. So you can go all the way back here to the 1950s, 1920s. You'll find this pattern over and over again. And that does mean, of course, that you need to immediately sell stocks, immediately need to sell cryptocurrencies, but I would be a little bit cautious, of course. And maybe if you're already in stocks invested, if you're invested in cryptocurrencies, to slowly start, taking profits on those positions over the next, let's say, 12 months, for example. Another thing that kind of caught my eye recently was the inflation rate. I said it, if you've been following my channel here for a bit, you know about this in 2022, when inflation finally started coming down again from over 9% here in the US. Back then I said, hey, this is historically speaking a very good time to start buying stocks, to start buying Bitcoin. And we were almost able to absolutely hit the bottom with our purchases in stocks and especially Bitcoin also. Now, inflation has been coming down, but somewhat is a little bit sticky. So the Federal Reserve, of course, would like to see inflation at around 2%, which always is their inflation target, so to say. So around here where this yellow line is. But it has been somewhat sticky. And Now, what some people do here, I'm not completely sure if this is a valid thing to do, but for sure something to look at is that they compared like when was the last period of time where we had like this spike up in inflation and then inflation very quickly coming down again. And in fact, we had this in the beginning of the 1970s, where we also had a spike up of inflation, then inflation coming down again very, very fast. And this is very interesting because many people now out there say that this pattern here, so this spike up, looks a little bit, or quite a lot actually, like the spike up we've seen here since 2021, with inflation going up and then coming down quite fast again. Well, you can see what happened here in the late 1970s, the beginning of the 1980s. We had like a double top in inflation. So it could very well also be that we kind of see something like this again, inflation going up a bit and then really jumping up one more time to like very high numbers here, maybe 11, maybe 12%. Because what is going on economically and like with central banks, they are doing basically a lot of the things they did also there back in the 1970s, where they stimulated the economy by lowering interest rates very quickly again. And I mean, this is what we are seeing currently from the Fed again. We are well on our path, to go to very low interest rates again. So this could be like a trigger that we see this recession coming up. I'm not saying this is going to happen immediately. If like things go normal, probably this is something you need to have on the radar, maybe starting in August of 2025. Although when a recession comes, or the trigger that triggers the recession, the reason that triggers this recession, this usually will happen also very, very fast. So be aware of that. To summarize here again, for most parts of 2025, I expect a very good market here, especially in Bitcoin, especially on the stock markets, not only the S&P 500, but also, stocks in China or everywhere around the world where we don't have a super high inflation at the moment. However, then in late 2025, I expect that we are going to see some economic trouble. I hope, of course, that I'm wrong, but it's better to be prepared than to wake up one morning and say like, oh my God, why is everything going down? Why didn't I sell before of that? You have been warned. That being said, I wish you a very, very happy last few days of 2025. Looking forward to seeing you again in 2025. Take care and bye-bye.